Have you ever stared up at a giant skyscraper and just thought, who on earth actually pays for all this? Well, the answer is a massive, pretty much invisible river of money that flows around the globe, and it's shaping the very cities we live in. Today, we're going to follow that money.
So, who owns these things? The answer? Well, it's almost never a single person. It's usually this incredibly complex web of global investors. And look, understanding this web isn't just for real estate nerds. It's about understanding how the entire modern economy actually works.
The official name for this is global capital flows. And that river of money analogy, it's perfect. This is a huge cross-border current of cash that is constantly on the hunt for the best returns, whether that's in a super stable market, a high-growth city, or a very specific type of building.
Okay, so where does this river of money actually come from? The sources are, as you can imagine, vast and incredibly powerful. Let's dive in and look at the main players who are feeding this stream.
You know, the why behind the money is really fascinating. You've got pension funds, right? That's about 30% of this capital, and they need safe, steady income to pay for all of our retirements. Then you have sovereign wealth funds and private equity, each kicking in about 25%. The first is a government investing for the long term, and the second, they're hunting for those higher risk but much higher return deals.
So once that money is in the river, it has to flow somewhere, right? The big question is, what decides where it goes? It really is like a strategic game being played on a global map. And this slide, it pretty much nails the two main strategies. On one hand, capital flows to what we call gateway cities. Think New York, London, for safety and liquidity, being able to buy and sell easily. But it's also chasing much higher growth in emerging hubs, like in Austin or in Nashville. It is a constant tug of war between playing it safe and going for those ambitious returns. And right now, there is one country that is the undisputed champion at attracting all that capital: the United States. I mean, yeah, it has its challenges, but its combination of market transparency, economic growth, and, relative political stability makes it the #1 spot for foreign investment, way ahead of everybody else. But here, right here, is where the story gets really interesting. It's not just about where the money is going, but what it's actually buying. We're in the middle of a gigantic shift, what people in the industry are calling the Great Sector Rotation.
Here it is in a nutshell. Money is flowing out of things like traditional office buildings and old-school retail centers, and it is flooding into 3 key areas that are basically powering the new economy: logistics, data centers, and life sciences. So let's break down why each one of these is such a hot ticket right now.
First up, logistics. Seriously, every single time you click that Buy Now button, you are creating demand for these massive warehouses. The e-commerce boom and the need for more resilient supply chains have turned these kind of boring-looking buildings into one of the hottest assets on the planet.
Second, data centers. The cloud isn't actually in the sky, it's in these giant buildings packed to the gills with servers. And with the absolute explosion of AI and our total dependence on cloud computing, well, the demand for these power-hungry, super specialized properties has just gone through the roof. They're literally the physical home for our digital lives.
And third, life sciences. We're talking about highly specialized lab and R&D facilities. This capital is laser-focused on innovation clusters, places like Boston or San Francisco, placing huge bets on the next big breakthrough in medicine or biotech. But this global river of money is not exactly flowing smoothly. It's actually heading towards what a lot of people are calling a wall of worry, a series of really significant risks that could disrupt this whole picture. And here is the headline number that has everyone justifiably nervous. Hundreds of billions of dollars in real estate loans, most of them taken out when money was super cheap, are all coming due in the next few years. This is a massive, massive problem. This is what's known as the wall of maturities. So what does that mean? Well, imagine you took out a huge loan for a building that was valued at $100 million a few years ago. But now, with crazy high interest rates and maybe lower demand, it might only be worth $70 million. How in the world do you refinance that loan? A lot of owners are going to be forced to sell at a loss, or even just hand the keys back to the bank. And that could send some serious shockwaves to the market. And on top of that huge wall of debt, investors are facing all these other major headwinds. Higher interest rates make everything more expensive. Geopolitical tensions, well, they just create a ton of uncertainty.
And there's often this huge gap between what sellers think their building is worth and what buyers are actually willing to pay, which has just slowed deal making down to a crawl. So we have this massive river of money. It's shifting direction and it's hitting some serious rapids. But why does any of this matter to you? Let's bring this all back home and talk about what this really means for your city. Well, the smartest investors out there are navigating this by being incredibly strategic. They're being super selective about what and where they buy. They're staying flexible so they can pounce on an unexpected opportunity. They're partnering with local experts who really get the feel of a city. And maybe most important of all, they are being patient. And that's really what it all comes down to. These huge global financial decisions have very real, very local consequences. Whether that half-empty office building downtown gets a cool modern facelift, or a new logistics hub creates jobs on the edge of town, or a cutting-edge biotech lab opens up just down the street, all of it is decided by where this global river of money chooses to flow. And that leaves us with one last really critical question. As technology like AI and massive challenges like climate change continue to completely rewrite the rules of our economy, the very definition of prime real estate is kind of up for grabs. So, what do you think will be the most valuable properties of tomorrow?